to the Value Investor TV podcast. It's a podcast that helps you grow your wealth and become financially independent. My name is Becco, and my co-host, Hari.
Hello.
All right. In this episode, we will talk about GameStop. It's been a few weeks since the Game saga took place, but nonetheless, we thought it'd be a good opportunity to talk about what happened and sort of lessons learned from that event. So before we do that, Hari, quick disclaimer for us.
Yeah, this is the Value Investor TV podcast. We're a podcast that helps you understand the concepts behind value investing. We are not financial advisors. We don't know your specific financial situation. So please consult with the appropriate advisor before making any investment decisions.
Excellent. All right, let's get to it. So GameStop, can you give us a quick rundown of what happened?
Yeah, so there's a lot of things that were occurring here. I think the first part of this is hedge funds have been shorting GameStop for a long time now, with the intent of, if you lower the price enough on a stock, the company will actually not be able to raise funds because GameStop is struggling. It's still profitable but still struggling. And if they need to raise money to pay off debt, they will struggle with being able to. So the best way that they can do that is sell equity on the market. Well, when the equity price of GameStop is $3 a share, they're not going to generate a lot of money with an equity sale. So this group on Reddit called Wall Street Bets, which has been around for a long time, started pumping the stock by buying and holding on that, and they got an infusion from the owner of Chewy and some other groups that put in money. So the funny thing about it is the hedge funds had shorted more than 100% of the stock of GameStop, which is kind of ridiculous when you think about it. So the Wall Street Bets, which, I mean, who doesn't love the underdog, right? Goes out and starts buying this, and it creates a short squeeze, right? And there's different levels of short squeeze that they hit, where it basically went to the moon, right? So it went up to like $400 a share from like a base of like 10, right? So this is kind of insane when you think about it, right? That this company was heavily shorted. But what kind of drew a lot of public ire, criticism, and so on was that the brokerage firms, Robinhood, was actually insolvent. They did not have enough funds to support the trading volume, and so what happens is your Robinhood and all these other brokerages actually go through clearinghouses. Clearinghouses are actually what moves shares in and out, and you have to have enough cash to cover the volume and the margin and all of these things that are going on. And Robinhood had to halt trading because they wouldn't be able to cover the liquidity of the situation. So as a result of all of this trading in these shares of GameStop got halted. The stock price went down because the hedge funds were not restricted by their ability to sell. And so they shorted the stock back down to 40, and then it went up again last week, and then kind of fell back down to earth a little bit, but not completely. The funny thing is, GameStop was not the only one that did this. There was AMC Networks. There was several other companies that were heavily shorted that kind of rode the train, as it were. So why should we care, right? Well, I'm not suggesting that you go and read Wall Street Bets and then follow their advice, right? We are investors here. There are people there who are following the value part of the investment strategy on Wall Street Bets. But that being said, $400 a share is far more value than GameStop is worth, right? And so the normal mechanism of action here is to sell when it gets high. And they didn't, right? But there are certain people who did, who profited tremendously from that, right? So what all of this kind of says, when you get down to the meat of it, is it's hard for me to believe that people weren't really pumping the stock, right, at the end of the day, because there were certain people who sold out, right? So there were some people who were there for an idealistic, screw the hedge fund kind of mentality. And there were others who were there for making a profit. And I don't have a problem with them making a profit. I mean, it's, what you should do in the market. But again, this is all goes back to speculation, right? I don't know that GameStop, I mean, you and I covered this stock about a year and a half ago or so. And we thought it was fairly valued at around $20 a share when it was trading at like 5 or something like that. I don't know the specifics, I'd have to go back and look. But it's certainly not worth 400, right? And, I can say that safely. And I think the moral of the story here is that as value investors, we've always talked about there's two kind of businesses. There's the cigar butt model, which is stock is not great, but it's way undervalued. And if you buy and hold and sit on it, you will see it grow. And then you sell it once because it's, you're done with it. And then there's the long-term play where you buy a great business at a fair price and you hold on to it for hopefully forever. And GameStop fit into that former category. So I would encourage people to look for those kind of businesses. You're not going to see it go up 20x like GameStop did, but you may find one that can go up 10x or 5x or just because it's so cheap,
Yeah, and then I think this is the kind of the crux of misunderstanding a lot of the value investor folks is that they think that when you think about value investing, they only think of the first strategy, buying cheap company, cigar butt strategy, cash asset that's over market cap. You buy that and then you hold it and then you sell it, and that's sort of a traditional kind of book value driven value investing approach. When in fact, value investing, I think, has more flavors than that. But in this case, in particular, GameStop and some other companies, you can find these sort of companies where the market has underpriced it so much that it is a value play in a traditional sense, and you can find those. And it's hard to find those companies that are in big sort of market cap, like mid to large market cap. You're not going to find those as much. But if you go down to like micro cap, nano caps, you will find those more often. But that's just one way of playing value investing, and then there's the other ways of playing value investing where you hold really good companies and you'd buy them not at a cheap price but at a fair price, and then you just hold them forever. So
yeah, and the thing I will say is that anything that is trading below the value, right? Essentially, investing as we practice it is time arbitrage, right? So we're taking something and sitting on it until, waiting until other people estimate the value the way we do, and then the price gets bid up, right? And so a lot of people are impatient. They want things to happen immediately. And if it doesn't, they sell and go on to the next thing and the next thing. And if you're in a hedge fund, you have no way of essentially doing that without you have investors that you have to meet timelines and deadlines and so forth. So you kind of force your hand into this shorting model, which we're seeing, right? You short companies because it's easier to push the price down than it is to see it necessarily go up. Becco and I have had lots of experience watching companies that we've owned be shorted heavily, right? But at the end of the day, those things, come back up, right? Because eventually the value of it gets realized. So I've never shorted a company. As far as I know, Becco has never shorted a company. And the reason for that is that if you just sit and wait, the value will be realized. And I've done this long enough that I've never actually seen a company not have the value realized at some point. So if you just wait long enough, and we're not talking forever, we're talking 3 years, 5 years, you will actually see the value realized. The difference is that a good business, the value keeps increasing every year. And a lousy business, the value may be flat or decreasing every year. But that doesn't mean it still doesn't hit its value target.
Mm-hmm. Yep, exactly. Those are good points. Awesome. Anything else to add on GameStop?
No, I think this is going to continue to happen, right? This is not the first time it's happened. It's definitely not going to be the last time it's happened. Um, the only reason we wanted to bring this up is more of a to understand why it happened, right? And I would tell you that businesses that are heavily shorted are pretty good, are pretty good place to look for investment ideas. Doesn't necessarily mean that they're not being shorted for a good reason, right? But there are still definitely stocks that are shorted heavily, but are actually good buys. So they are worth looking
That's a
into.
good point. That is a good point. It's a fertile ground to look for potential opportunities. I
Yep.
would say in a paradoxically 52-week low list, and then a number of stocks that's heavily shorted. You rank them and then figure out top 20 most heavily shorted stocks and look at reasons why. In most cases, they are they are low for a reason. There's something wrong with the company, but then you'll find one or two opportunities where um, the market just hasn't realized its true potential. It's hard to do. It's a lot of work. You just need to go through them one by one. That's where a lot of the fundamental analysis comes into play. But it is a fertile ground. To your
Yep.
point,
Yep.
makes a lot of sense. And I'll just add one more thing about this event recurring. All the things we talked about in previous two episodes: stimulus, inflation. Money is hungry for returns, and it will seek returns wherever they are. And now, with more money in the pocket, people are going to have more. More money is coming to the market, hungry for returns, and speculative animal spirit is out there. And things like this will continue to happen. I'm sure. And so, um, yeah, just to tie back to the couple of topics that we talked about in the previous episode. All right, so that sort of ends it for GameStop. Let's move on to cryptocurrency, Bitcoin. Obviously, full disclosure, I am invested in cryptocurrency, and I think you are too, Hari.
I'm not
Uh,
actually not anymore.
Not anymore. Okay,
Yeah, I sold it when I had uh, at the beginning of the pandemic and bought more stocks with it because stocks were cheap. So
gotcha. So, I mean, you've been aware of cryptocurrency, Bitcoin in particular, for quite a bit. I think you mined some yourself, didn't you?
I did, yeah. In 2013 or so, I mined several Bitcoin actually. So, you know, I was actually well aware of it when it first started in 2008, I think, or 2009. I saw the thing. I could have mined many more hundreds of coins if I wanted to, but I just never got into it until about 2010, 2011.
Hmm.
And then I built a
I
mining
think
rig.
this is all related.
Yeah.
Some of the stuff we talked about, stimulus check, inflation, and then Bitcoin,
Yeah.
and obviously GameStop, they're all sort of related in that people are looking for ways to protect themselves from potential runaway inflation.
Right.
I think one of the things, I mean, please kind of talk about the merits of Bitcoin, why people think it is, um, why people think why people are piling onto it, and then potential downsides and the risks involved. Ari.
Yeah. So Bitcoin, and cryptocurrency in general were kind of this idea that you can, with electricity, you can essentially and complex cryptographic algorithms, you can keep track of transactions on what's called the blockchain, which is essentially just a ledger of what all transactions have occurred when you transfer money between parties. And so the advantage, so Bitcoin is not anonymous. Despite what people say, like you can track it and then identify people based on that, or at least their wallet that the coins generated from. But the advantage of Bitcoin is that it is a store of value, as the proponents would tell you, is that the store of value here is that you can use this money or use this externally from cash, and be able to transmit it to anybody who has a Bitcoin wallet. So imagine if you were in Argentina or something like that, and you want to transmit money to California. Traditional methodologies would require currency exchange, taxes, all of this stuff. But if you have Bitcoin, it's very easy to transmit this digitally without any hassle. So there's lots of problems though with Bitcoin, right? So one of it is the volatility of it. So to give you an idea of, I mined coins, and at the very beginning of when I mined them, I used it to pay for services on the internet. Well, those services that, when Bitcoin was $300, I spent an entire coin on, one of those. Well, now when Bitcoin is $50,000, I just wasted $50,000 on that one transaction, right? So when you consider that Bitcoin is fixed, there's only 21 million coins that are ever be issued. It's deflationary, right? So there's no increase in the supply. So people want to hoard Bitcoin, right? Because there's a fixed amount of it. If I spend it today, it'll be worth a lot more tomorrow, so I hold on to it, right? So if you look at other coins like Ethereum and stuff like that, they have some inflationary amount built into it that Bitcoin doesn't. So what does this all mean? I think the biggest risk that people are not paying attention to here is that, this is a commodity, right? It's a commodity that has been adopted by governments by companies and so forth slowly over time. But it's a commodity nonetheless. I can't tell you what the value of this is, right? 10 years ago, the value of Bitcoin was, a few dollars. Now it's $50,000. Is it going to be $2 million next year? Is it going to be 20 cents next year? I have no idea, right? Because there's no inherent cash flow that can be generated from the coin, right? So what I'm going to just, to finish with it is I mine these coins mostly for just curiosity, right? And the fact that it went up to I sold it at $8,000 or $9,000 per coin was nice. I mean, it was great that I had it, but it was more valuable to me, that I bought stocks, which have also appreciated 4 or 5x, from the price that I paid for them. So I'm not really out much in the way of Bitcoin, right? My Bitcoin purchase, I don't really regret at this point, or set in my sale, because I'm even to where, the stocks that I bought have also appreciated. So long story short, it's a commodity. I don't know what it's worth. I don't think investing in it long term is as safe as a lot of people are thinking, right? Because it's speculation.
I think with Bitcoin, it's hard to assess. It's hard to assess the value using traditional method of cash flow, sort of discounted cash flow valuation metrics.
Yep.
Just because it is not something that's going to throw out cash. From intrinsic value calculation standpoint, it's very difficult to assess it. It's, in fact, if you do that, the value is zero because it's just like gold.
Right.
It doesn't throw out any cash. But then there are obvious utilities behind it, and that's why people are flocking to it. So I think we have to be careful how we assess something like this, because I do see a potential in this, and I do see potential as a store of value, but also other cryptocurrencies. But having said that, it is highly speculative, right? It is speculative in that, who knows what's going to happen? It's an uncharted territory, and so you have to approach it with caution. But I do see an upside with it, but also just being mindful of that, of the speculative nature of some of these coins. So, I think that sort of wraps up our conversation on Bitcoin and cryptocurrency. Anything else you want to add here, Hari?
No, I mean, I'll just add, as if you're looking at this as a, there's a lot of people, young people especially, who are thinking of Bitcoin, crypto, and also so forth as the long-term play, for your retirement and so forth. Just remember that, the stock market, and businesses in general are things that actually you can value, and that the value is something that can grow over time, right? And that is far more, that is far better, a way to, and more reliable way to make money, right? If you were in at the, when Bitcoin was $1, yeah, you got lucky, right? But that's not based on science or your ability to actually know that something is going to go up, right? You're far better off investing in businesses because they actually generate cash flow for a long period of time. And I think as this is a value investing group, we value businesses. If you can't value it, then it's speculation, right? So you're just hoping somebody else is going to pay you more over the long haul. Thank you to all our listeners on YouTube who've kind of started following us. Our Nick, our video guy, has done a great job with making the YouTube videos useful with the lower thirds and things like that. We'd really appreciate it if you are watching on YouTube to like, comment, and subscribe, and hit the notification bell. That really helps us grow our channel. To let everybody know, we've also started a Patreon page. It's not fully up yet, but we will send the link out in our Slack channel and have it available on our YouTube video links in the description. We'd really appreciate it if you are interested in help supporting us. The money that we are getting there is not to for us to pocket or anything like that. It is to help us grow the channel, to make better content, more content, and give you guys access to us in more one-on-one situations, or one-on-few situations, so you can ask us questions, talk about your portfolio more, questions that you may have about investing, and so forth. So we'd really appreciate it if you when we get the Patreon page up, if you'd come and take a look at it with us, and because I think we have a lot coming down the pipe, and we would love to have you guys aboard for all of it. All right, well, that'll wrap it up for this episode. We will be coming back with a company for the next episode, which I think will be very interesting for everybody involved, because this is not our traditional kind of discussion. Instead of talking about a great business at a fair price, we're talking about a mediocre business at a very, very good price. And I think it'll be worth you tuning in. So I hope you will join us for the next episode. Thanks.